Evening, everyone. So look, it's been coming up to 20 years since Lord Stern first started to socialise the notion that climate change represents the greatest market failure in economic human history. Now, fast forward to today, we've made some progress. There's more than 75 different carbon pricing initiatives out there. But the problem is that the average price of $32 per tonne is wholly inadequate. And when we combine that with the fact that more than 75% of emissions are still completely free, then it's no surprise that in general, a company's emissions profile has little bearing on its financial performance, on its share price, or its cost of capital. So from a purely microeconomic perspective, companies are acting rationally by demoting the importance of emissions in key business decisions. Now, as investors, this is a wholly unacceptable outcome. So as a result of that, there's more than 60 trillion of assets that have signed up to take action. But what is the nature of that action? And my argument today is that we've got that wrong. Primarily because we did not reflect on the theory of change for the specific problem at hand. Rather, we resorted to what we know, what we feel comfortable with, and that's corporate engagement. But given what we said about engagement being a market failure, talking to management is effectively engaging with them on this topic, is asking them to take irrational action by giving up financial performance for the sake of the public good. Now, I could talk for hours about what that would mean for different industries and different companies. Fortunately for you, the PRI only gave me, I thought it was 5 minutes, but the clock seems to be going a bit quicker. I'll just look at one simple example. Take one of the world's largest steel companies. They mapped out what a net zero plan would look like for them. And they estimate that it would double their capex spend over the next 10 years, while adding more than $250 per tonne to their production costs. While on the other side of the equation, they're not seeing any premium pricing coming through on the demand side. Now, those of you that are familiar with steel company balance sheets and the wafer-thin margins that they operate under, this is more of an insolvency plan than a transition plan, and hardly an inspiring set of engagement goals. So I hope my point is clear. Engaging with management to effectively break their own business model based on a world that we want rather than a world that we actually see has not worked and will never work. Now, I know that people will point to various successes on corporate engagement. Look at the targets, look at the disclosures we now have. But I would argue that the only thing that counts is capex spend, because that allows you to cut through the noise and really see how a business is being positioned for the future. And on that metric, according to the TPI, 1,000 companies in scope of their recent report, only 1% of companies have aligned CapEx with their decarbonisation goals. Disappointing, but not surprising. Now for the upbeat bit at the end. It doesn't mean we sit on our hands. We go back to the root problem. If climate change is a market failure, the problems are the rules of the game. And therefore, by definition, the ones that can fix it are the rule setters. You know, we've heard a lot about EVs over the last couple of days. That didn't happen by accident. It was a clear policy agenda. It was mandatory production targets. It was financial penalties, tax breaks, and consumer subsidies. And as a result, we now sell more EVs every single week than we did in 2013, just a decade ago. Now, we've just heard from the Deputy Prime Minister about all of the government programs that are in place. We've heard about the IRA, we've heard about the EU Green Deal. These have been critical and fundamental to decarbonising assets, scaling critical technology, and crowding in private assets. When the policy is in place, corporate behaviour changes automatically and rapidly. So as investors, if we want to keep 1.5 degrees alive, then we have no choice but to repoint all of our engagement to the real change makers, governments and regulators, and then let the animal spirit of public markets take over. Thank you very much.
Good afternoon, everyone. I understand we're the last thing standing between you and drinks, so let's try and keep the debate focused. I'm an economist by training, so I have a lot of sympathy for the argument that Jake and Mirza have put forward. We have market failings that need to be addressed. Companies respond to policymakers, and they respond to regulations. I'm not disagreeing. I think this is entirely true. What I'm questioning deeply is the ability of investors to change government policy. Investors had very little to do with government policy around electric vehicles or renewable energy. The average investor specializes in relationships with the Treasury Department and the central bank. We do not have deep relationships through departments of trade and industry, energy, electricity, mining. We have occasional interactions. Companies, on the other hand, have entire departments dedicated to this. This is what they do well. We have good relationships with companies. And I think the fundamental question is if we believe that long-term value creation is aligned with companies getting serious about the transition, we are best placed to hold companies accountable for their transition plans and the implementation around it, and for then lobbying government as needed. We're starting to see the tools being developed. Influence map is starting to provide usable data in terms of what companies lobbying are doing. We need to hold companies accountable for that, because we have seen investors change company behavior. We look at the disclosure data, yes, we can write it off, but it's not something companies wanted to do very long ago. CDP shows us that disclosure is up 24%. The number of companies reporting is up 24% since the previous year. The number of companies formulating plans, which will then get to the CapEx, has doubled since 2022. 2 years, it's doubled. Most interestingly, companies in India, where the government target is 2070 for net zero, has seen a 514% rise in SBTI commitments over the course of last year. So companies respond to signals from investors. And we can hold companies accountable because we have the tools to do that. So let's start with what's in our toolkit at this point, rather than spending a decade building a sovereign engagement business that we somehow are going to get asset managers to pay us to do. Thank you.
Great. Well, first of all, thank you, all of you, for an incredibly engaging, passionate debate there. So the question is, who won? Well, you may notice that we don't have a voting panel up here, so that's actually down to you. So again, if you don't mind opening up Slido and make a decision. Was it Jake and Mirza on policy, or was it Anne and Asmira on corporate?
We noticed it was a girls versus boys team.
Deliberate.
You're going to have to stay neutral.
I will. And red team and blue grey team.
Arsenal.
Great, so let's have a look. Okay, so 63%. Moving around slightly. So we've got around two-thirds, about two-thirds, getting closer between the two. Now, if we can also now, I don't know if this is still going. But if we can now just have a look at the results from earlier. So on this, I think it's quite clear that Nazmira and Aman have this. Can we see the results from the earlier panel? Ah, interesting. Okay, so there's a big push earlier from the sovereigns and the policymakers. There's a strong turn back onto the corporates and engaging with companies. Interestingly, we had a live session earlier, and we put the same poll to digital attendees, and they came out about the same in terms of saying about 2/3 on the corporate and a third on policy engagement. I think what would be really interesting is if we had a look at results. If we were to run this a year ago, would we be anywhere close to kind of 30–40% on policy? Because I've certainly seen over the past year a huge uptick in terms of kind of the interest and recognition of the enabling environment and the role of investors there. And again, interesting to look at this in a year's time to see how that may have changed. But I think for this debate, it does go to the corporate side. So thank you to so we just use the last kind of 10 minutes or so, just to put a few questions to our panel of speakers, and also just to give them the opportunity for a balanced discussion, because I think everyone sees that there is potentially a role for both here, but I'm very grateful that they're willing to take kind of two opposing sides so we can have a really rich discussion there. So maybe if I can start with you. First of all, just very interested in your reflections on those poll results. But also, the big investors have been doing a lot on policy engagement. And as you can see from those poll results, there is interest there from others to get engaged. And just wondering if you can share any reflections from the experience of the big investors. How best to go about that? Where would you start?
First of all, I'm a really sore loser. Still.
It's good practice.
Yeah. In all seriousness, I can take my debating hat off now. I think the urgency of the issue means that we have to use every single lever. That's corporate engagement, that's sovereign engagement, and that's everything in between. We have invested a lot of time in what we call macro stewardship. It does take a lot of time to build relationships and really understand what works and what doesn't work, and you can't just take parallels with what's happened on the engagement side with corporates, because the dynamic, the leverage, the influence is very different. What I would say is that's what the PRI is for. And we've been really strong supporters of the collaborative sovereign initiative that the PRI has been running for a couple of years. One of the key things with sovereign engagement and corporate engagement, it's not about the volume, it's about the effectiveness. And one of the things that really the PRI had brought is making sure that the engagement agenda is underpinned by really high quality research, so that we go to policymakers with a very clear understanding of their policy environment, the specific challenges that they face. We have to build productive and constructive relationships with key stakeholders outside of the Treasury. And most importantly, our policy recommendations need to be practical and actionable. And the counterparties need to see the benefit and the value add of being part of that dialogue. So if anyone is not familiar with the PRI program, please look into it, support it, get involved wherever you can. And I can confirm that there's no money exchanged hands for that plug.
Thank you very much, President. Nazmira, maybe if I could turn to you. And just thinking 91 is involved in a lot of collaborative engagement, including the Climate Action 100+. And I know you have a strong focus on emerging markets. And just interested in your reflections from everything that you've heard in this debate, so on both sides of the policy and on the corporate. What's your takeaways from that on thinking about investing in emerging markets, and in particular around engaging with state-owned enterprises?
when we move beyond the debates, we have to acknowledge that it takes both. It takes both the sovereign and the corporate engagement, particularly when you think about emerging markets. So if we look at most middle-income markets beyond India and China, the concentration of emissions is immense. So in most countries, beyond the two largest, somewhere around 10 companies account for 50% to two-thirds of emissions. In South Africa, 2 companies account for 60% of emissions. So as we think about that engagement, there is a need to engage the ecosystem. And I would go beyond just sovereign engagement. It's the banks that finance into the space. It's some of the other interested stakeholder groups, the unions at times have to be part of the discussion. So it's focused engagement where you can move the needle. If you're going to engage a state-owned enterprise, government policy is, by definition, part of the mix. And I think one of the things we have spent time on is finding policymakers that are likely to be sympathetic to our concerns and figuring out how we can amplify their voices. Because it's much easier to support change from within the system than to be this outside protester who is working from outside. Because that doesn't tend, well, our experience is that hasn't been so useful. The last point I'd make is combining different teams, equity team, debt teams, sovereign debt teams, is very powerful. And for example, what you've seen in the sovereign space is this increased move to sustainability-linked bonds. And what's really powerful about that is in order for them to be issued, the finance ministry needs to bring the whole of cabinet along to the KPIs that are being set. So we've seen, first that we saw from Chile and Uruguay, and both of them had climate-related targets built in, and that required the whole of cabinet to buy in both cases, which is very powerful.
Great, thank you, and very much that whole of government approach that's required there. So, Jake, if I can turn to you. Now, you mentioned during the debate your role within the Net Zero Asset Owners Alliance. I was just wondering again, thinking about what you've heard this afternoon, what's your expectations as asset owners in terms of what asset managers should be doing in this space?
Yeah, we issued a call to action as the Net Zero Asset Owner Alliance back in February that we sought to have distributed to our asset managers independently by each of the members as they saw fit. And it really talked about this idea of systemic risk and set forth some of the different best practices that we've developed that are designed to embed into selection, appointment, and monitoring processes, specifically focusing on some of these systemic stewardship questions. So far we've developed a set of best practices for proxy voting on net zero, engagement on net zero, and then the last one most relevant to this conversation is policy alignment, and how managers are thinking about policy alignment within their portfolios. I encourage folks to check that out, and I'll speak a bit more about it at the Asset Owner Breakfast tomorrow. But I think an important aspect of that focus for the Net Zero Asset Owner Alliance is really trying to figure out ultimately where we as financial actors are able to exert the most influence is often, if you're thinking about it as a market-based system, where do we have the most direct buy-sell decision? And for asset owners, that's really with our managers. It's not with corporations. For most of us, if you're working directly with asset managers, doing it in-house, that might be different. But for most of us that work with external managers, we're one step removed. So that underlying portfolio company might not really care if I sell them or not, as Westpac. But the asset managers we work with, where we have a stronger relationship, we're in touch more consistently, and we have more opportunity to build an understanding in a longer-term strategic partnership, there's obviously more at stake for them in terms terms of really working with us to make sure that they're aligning with our interests. So that's where a lot of our focus has been as the Net Zero Asset Owner Alliance.
Great, thank you, Jake. Anne, if I can turn to you, and again, I'm going back to the debate, but just your reflections as a US headquartered asset manager in terms of thinking about some of the political headwinds that have been seen in the US. What's your reflection from this debate in terms of the role for engagement and stewardship?
No, thanks very much. I'm sorry, back to the boring old fiduciary duty. Prudence, remember loyalty. What does loyalty mean? It means you're investing other people's money. And your duty to them is primary. So, unless you can square off what you're doing with your fiduciary duty to generate repeatable risk-adjusted returns, it is for consideration, for dialogue, for debate, but it doesn't and never can and never should step in between you and the people who the money belongs to. So I really like a very important point that Kirsty Jenkinson made on the opening session, which is that asset owners need to have absolute clarity about what they expect from their managers. And really this question of the cascade, the chain of command, from the people who the money belongs to, asset owners, if it's an institutional arrangement like a pension fund or individuals using an advisor for 401k, the accountability of the manager is now under scrutiny. And therefore, making sure we have the data, the evidence, the accountability mechanisms in place is absolutely vitally important. So we've got to be able to, and this is, I think, finance has its emotional moments. You mentioned animal spirits. I'm not sure that was ever a good idea. Anyone seen their dogs charging around in the garden says, yes, animal spirits, but it's not the way to run a global economy. So we need something a little more sober and considered. But this issue of investor governance is tremendously important to the next stage. The other thing I want to mention, and I think Nazmira touched on it very well, is that the concept of the just transition is what the preamble to the Paris Agreement is all about. If you go back and read that, that's also what we all signed up for. Making sure vulnerable communities, the impact on the workforce, indigenous peoples, this needs to be part of the plan. And therefore, rather than even just thinking about financial markets, where's the money? We know some private financial markets. And policymakers, we've got another group, which is civil society, and their representatives and stakeholders. So we've got to get into collaborative design mode, where all sides are able to build this from the bottom up. And we've done it before. I do not believe in the idea of the field of dreams. It's a bit where we are at the moment. If we build it, they will come. As Kevin Costner. I don't believe it, because we don't know where the field is, we don't know what game's going to be playing, or even if we've got our stocks and shoes on and we're ready to go. And it seems to be in the middle of the night, if I remember, that baseball game, no building it. So the point is, we've actually got to design these investment opportunities to meet the investment needs, the fiduciary needs of those who have the money. And the point is, we've done it before. I was speaking with someone just the other day about the Novo Mercado. This was my first piece of work working with the regulators, the stock exchange, the trade unions, the companies and others in Brazil to build out a new market, which is now hundreds of billions of dollars. It's, coming on the wake of a complete dearth of investment in Brazil. And now, these issuances are majority taken up by international investors. The way we designed it was through having conversations with investors about what would bring them in. We're seeing this explosion up to $1 trillion in the fixed income markets, green, rainbow, pink, multicolored bonds, but use of proceeds bonds. And we're now getting our act together, I think, on standards and data and comparability. These are significant sums of money, so I'm quite confident the money's there. What's lacking is an understanding of what investors actually need. So let's design for the idea that the customer is always right. And the customer, and the working people, families, the communities whose money that we're investing, and they have a long-term perspective, and they have multifaceted interests in making sure that we have shared prosperity and an inclusive society and a safe, natural environment to live in.
Great, thank you very much, Anne. We are now out of time. wrap up, I think the three big messages coming out of the debate and this discussion: urgency of action. Time is ticking too quickly now. We really need to be accelerating the net zero transition. And stewardship and engagement has an absolutely critical role to play on that. Second part, I think, good conclusion that absolutely corporate engagement is key, but there is a role of policy engagement as well if we're going to manage down those risks. I think we've actually heard from all four of our panelists that you need that combination of the two working together in terms of what the policy side is doing and that corporate engagement. And third, collaboration. It's a really effective, a really efficient way of doing this, and given that we don't have a huge amount of time, effectiveness and efficiency is very much a good thing. So whether on the corporate side, looking at Climate Action 100 Plus, or Climate Engagement Canada, and then, I guess, as we were saying before, on the policy side, on collaborative sovereign engagement initiatives, there are opportunities to get involved, to work with your peers in this space. So on that, I'd like to say a huge thank you for my panelists for their fantastic contributions, and we'll hand back to Amber, I believe. Thank you.
Thank you to our panelists for that lively debate. It was so fascinating to see how opinions shifted. That's it. We've reached the end of day 2. Now time to go out, enjoy yourself, socialize with your colleagues in the main hallway here. Tomorrow's breakout session starts with a breakfast for asset owners only. There will be a peer discussion, and that is won't be available online, so you got to be in real life for that in the morning. But for our digital attendees, do stay tuned, because a number of today's panelists are going to be heading straight into the live studio for an audience Q&A. So that's happening in just a couple of minutes. Aside from that, the regular program will kick off at 9:30 a.m. Eastern Time. Have a great evening, and we'll see you back here tomorrow.
Do you know how to stop?
What's that?
Do you know how to stop? Pause the recording.
What recording?
Take this one.
It's done back there.
Huh?
It's done in the back.
Oh, okay, so
This
the
is
stop.
connected to that.
So by itself.
There's people working behind the scenes. Behind the curtain.
Yeah, I'm just following. Okay, thank you. 43777.
Those are the ones that they did. Oh, no.
All right, I'll do late. I do late. We're on to the
How do we fix this? Very good at what he does
Yeah, then we know they're out. Just ask to move into the drinks reception, just say John Rose.
Face. Right.
There was no reaction. I came fine. I said, walk out the door. Oh, crap.
Yeah, you wait to see that when you go in, they go, oh, I was trying to say. That's right. And then, oh yeah, okay, nice. So get back to yourself. I sent you an email, but it's very sad. We're not sad. Oh, great. Okay, cool. Sure. You can always have different people. But like, we can always just have to not say. Well, the problem is that in order for the town, like, keep them out of look at the town. No, I think so. Yeah, it's also.
Yeah, you got this converted, ready to load up on that person.
Right? We got some sort of security. You know this building much better than I do.
That's what I wanted to do. I just finished.
Yeah. Like, first of all, you never look at it. And then if you do have to practice it all the things, just make sure that it doesn't say what it says. That's what I was going to say. It's like restrictive.
I'll gather up everything else tomorrow morning and whatever I want to do.
Encrypted. It says like, hi, my name is Tracy and this morning I ate 2 eggs and my favorite drink is orange juice and, you know, just like random stuff.
All right, guys. Thank you. Oh.
How fast? People start like speeding up thinking that they're too late and then to get themselves. So the thing is, we can definitely leave the lecture of my talk. The lecture of my talk.
Sure. You guys.
Oh, thank you. Thank you. Oh, I know. I forgot the charger. When the wife is turning on. Well, I do with some problems. Oh, thank you. You did. Yeah. So much. Perfect. See you later. Thank you.
Have a good night.
No. Well, like I fly home on Friday. And then on the Tuesday, so after Thanksgiving Monday, I'm straight back for quite a large ceremony First Nations event. Which I'm running it all to. Yeah, probably. Yeah. Probably. And I'm like, oh. Like, I have no idea who you are. Oh yeah, you don't know me either. Yeah, that's for next week, and then I think I have a week for like prep work and stuff. How about you? Is this like the big one? Is this it to go back to having like a little bit more relaxed life? It's just that's a lot.
get it? I can talk now, right? Yes, yes. No, I didn't want to touch. I was gonna cross it.
You can't wait for